Have you ever been let down by someone? Like when they promised to do something and then they didn't do it. It can hurt. In the financial world, counterparty risk is when you are depending on someone like a bank to fulfill their part of an obligation with the risk that they can let you down. This can hurt too, not just emotionally, but financially as well. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. The recent failure of Silicon Valley and Signature banks have revived concerns about counterparty risks. That's the risk that your bank will be unable to return your money when you ask for it. When Silicon Valley Bank fell, it did so under the weight of an old-fashioned bank run. In one day, depositors withdrew $42 billion, nearly 1/4 of the bank's total deposits. If the purpose of a bank is to safeguard your money, then even that level of withdrawal activity in a single day wouldn't be a problem. But banks are not depositories. They're lending institutions, and under the fractional reserve banking model, they can lend between 90% and even 100% of the money deposited with them. Fractional reserve banking is the core of counterparty risk. That's because it is the fundamental reason why a bank may not have your money when you want it. It's estimated that roughly 40% of all U.S. bank deposits, totaling more than $9 trillion, are not insured by the FDIC. The government did invoke a special exception to fully protect the uninsured depositors at Silicon Valley and Signature banks. But when Treasury Secretary Janet Yellen was recently asked if these depositor rescues meant that all uninsured depositors would be saved from now on, she had this to say. This is not something that we have looked at. It's not something that we're considering. I have not considered or discussed anything having to do with blanket insurance or guarantees of all deposits. And that means anyone with $250,000 of deposits or more at a bank remains up to their eyeballs in counterparty risk. Even those with insured deposits are not entirely free of the stress that can arise from counterparty risk. It's true that no depositor has ever lost a penny of insured funds since the FDIC opened its doors in 1933. But FDIC insurance does not magically remove the risk of initial deposit loss. What it does is reimburse depositors for those losses. For retirement savers who want peace of mind that comes from significantly reducing their exposure to counterparty risk, one asset that goes a long way to helping them achieve that is physical precious metals. When you own a gold IRA, your assets must be stored in an approved precious metals depository. And unlike banks, the purpose of a metals depository is to protect your assets. When your metals are stored, fully allocated, and off the depository's balance sheet, it means they cannot be loaned, pledged, or invested. There's no fractional reserve banking going on here. It effectively means that there's no counterparty risk in your depository relationship. Storage of metals isn't the only thing that eliminates counterparty risk. It also is a function of how metals derive their value. Gold and silver are tangible assets respected by the world for thousands of years as a stable store of value. In other words, Unlike practically every other asset, including cash, the value of metals is not dependent on any person doing any job, performing any task, or honoring any obligation. This point of view was echoed late last year by Bloomberg columnist David Fickling, who declared that a crucial advantage of bullion is that it doesn't bind you into a relationship with an unreliable counterparty. Fickling added, "In a world where you can trust no one, it makes sense to bulletproof yourself with metal." Unfortunately, in our lives, there will always be those who let us down. And the same is true in the financial world. We can't simply put on a gold and silver bulletproof vest to prevent people from letting us down. But with the help of physical gold and silver, the exposure of part of our hard-earned retirement savings to counterparty risks could be eliminated. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.